So for this weekly review, we're going to go over all the asset classes. I'm not going to do any weekly outlooks because I'm not speculating on the following week. So it'll be just reviews of the last week. Okay, so starting on indices from last week, we had a major dump. Okay, now this puts us in a better position to long from, because if we look at the monthly chart, we're extremely bullish. Okay, we are rejecting lows, breaking highs on all indices, right? So any drop into a higher time frame PD array gives high probability longs back to all-time highs. Okay, we've seen that multiple times from here, from here, from here. Every down close candle is getting engulfed. All right, which is what I would expect until you're wrong, pretty much. Until the market tells you it's bearish high time frame, you just keep longing on the retracements and on the pullbacks. Okay, so last week on indices did not really provide much. We just had a rally from Monday, we kind of chopped, and then we dumped. So another reason I'm kind of staying away from indices right now. They're not very clear, but something to note is S&P did leave behind a lot of liquidity up here, and we have turtle soup this low and displaced above this high. So it looks like this in the following week, even though I'm not speculating on anything, that we could see a sustained move higher to this high, possibly. Okay. Going into, and that pretty much sums it up for indices. Indices aren't very interesting right now, at least in my eyes. It's always a safer bet to expect we're going higher at all-time highs, right? So same protocol for the past however many months. Now going into, we'll leave FX last because that's what I took, and I'll do a little trade breakdown. Bitcoin, I did expect Bitcoin to come attack this low. Now, I did not trade this because if you look on a weekly time frame, there's really no point in shorting this at all. But when we create a candle like this and we range, it's likely the false breakout of this range, or the first breakout of this range is going to be false. Okay, so we had a nice reversal forming here, and even more cleaner, we had a daily gap tap right here. Now, if we were to take this setup right, you have a daily gap sponsorship, you have an hourly liquidity pool right here, and then time of day. If I can pull it out, mark midnight, rally above midnight, daily gap, FEG, FEG above high, 4 hour, and a dump. Okay, I thought this was a really clean setup that I had tape read on Bitcoin, but again, not trading it, not speculating. I'm going to let the rest of the year play out and get back engaged starting January. Okay, so going into FX, I'm gonna get rid of this. Okay, so I'm gonna do some dollar analysis quick, and I'm going to do in this review I want to talk a little bit more about my higher time frame drawn liquidity and more longer term sentiment for DXY as the new year is ending and a new yearly power 3 is opening up. It's important to not only expect, right, when I'm trying to trade a weekly candle, for me to trade a weekly candle, I have to understand where the monthly is going to gravitate towards, right? And the monthly chart has a power 3 of the new year, okay? So it's important to look at all these aspects and have this time frame alignment. So if you go on a yearly chart on dollar, I believe that we are gravitating towards this high. Okay. Now, that being said, we have left a yearly gap untapped right here, and we have just purged a range high. Okay. So, I'm watching for if dollar wants to have a true breakout of this high, meaning that we're going to target this liquidity pool, or if dollars are going to have a false breakout of this high, and then we can target that yearly gap here. Okay. Now, that's one of the main reasons I'm sitting out this week, is I want to see how we react above this high. Okay. Are we displacing above this high? Are we ranging or failing to close? Okay. These are things you want to watch for on dollar for a longer term sentiment in euro and GU. Okay. Let me get rid of this. Now, with that being said, on euro and GBP, we have a very similar analysis on a higher time frame. Okay. On a monthly basis, we have left relatively equal highs up here of this range. We have purged one side of it. Okay. So it is likely, if dollar rejects, or it is likely that dollar rejects and that euro can find a reversal maybe in January, possibly the end of year, possibly, and we can target these highs. But again, I'm watching for a false breakout of this range, should be turtle soup, or expansion beneath this low, which would indicate that euro is going to be sustained bearish for a much longer term, and we can target this low. Okay, so again, I want you guys every quarter, every month, every year to reanalyze what you believe the higher time frame institutional order flow is going to be targeting, right? If I have a great idea of that price is likely to draw towards this high in the next coming year, then that gives me much more probable weekly expansions, because I know where the monthly candles are going to target, right? So you want to be able to have that time frame alignment in your drawn liquidity, right? So going into last week on euro and GU, there was a very, very clean setup. Okay, if we replay now, I did not take this setup, and I want to show you guys why. But I had expected from a weekly standpoint, okay, I had anticipated a bearish candle. Why? Because we are respecting bearish PD rays. We have created a range, and we purge one side. All right, that indicates that the low of the range is now the draw. So I expected a bearish candle. Now, to sponsor this key level, or to sponsor this expansion, I had this daily order block. Okay. Now, inside of this daily order block, we had a liquidity pool. All right. So this was the basis of my trade idea. Was a purge of this liquidity pool inside of this key level after the weekly open. Right here. This was my trade idea. This is what my charts were marked out with. Now, when this had occurred, the purge of this high, it was 1900. All right. So I don't trade Asia. So I did not take this short this week. All right. Just, following the rules, following my system. And it turned out to be high a week. All good. No FOMO, right? Follow the system. But nevertheless, a very clear draw and a very clear setup, in my opinion. GU was not as clean. We had, again, the same thing. There was a bearish bias on the weekly chart. You have a weekly key level, weekly order block tap. And you go down to an hourly. But we did not soup anything, all right? So we just had a trend up to it. We had one tap, and then we ranged, all right? I was looking for a soup of this high as well to get realigned in the weekly candle. But end of year is going to be a little bit more sloppier. It's not going to be as clear and as clean delivery as you want it to be. Okay, so you kind of just have to be patient, wait for the A+ setups, and we roll from there. All right. Any questions over anything? Either of you guys, or any questions in general while I'm here? Oh yes, let me do gold. Let me get off replay. All right. So last week for gold was, let me remember right. Oh yes, the Monday high week. So last week was a very obvious sell week on gold, in my opinion, because we had turtle soup this high on a daily chart, rejected it, fast expansion lower. We had closed inside on this candle, so this candle is going to be an obvious sell. Okay, now there was no real key level that we hit for high a week. Okay, we didn't tap this gap, we didn't tap this order block, we kind of just opened and fell. All right, so I did not see much opportunity, or let me preface this, I did not see much high probability opportunity in gold last week for any swings. Scalping, yes. Swinging, no. Now, for this week for gold, I think it's also a very clear, right? If we look on a weekly chart, again, weekly, I'm bearish. Weekly, the previous week's candle had closed below this one, which indicates this is now an order block because it stabbed into this high. If you go to an hourly chart and you open up, oops, Sunday open. What'd Sunday do? We rallied, key level, liquidity pool, London, dump. Okay, so I'm expecting a continued sell-off on gold for the rest of the week. Possibly this high smacking back into this low for an extended sell-off. Now, again, I'm not trading this week because what very well could happen is something like this. Why? It's a bank holiday week. Okay. You're not going to always have the cleanest delivery, so you can't always expect it to happen. Okay. It can happen, but it doesn't mean it has to. All right. Which is one of the reasons why I am not partaking in any swings this week. The monthly is, of course, very bullish, and now the weekly is pretty bearish. I'm thinking I'm bull. Once we take out the liquidity pool, we have lower. It's just reasonable thinking. Now, it's possible, but if you look at this monthly candle, right, because the weekly candles are inside of a monthly candle, what have we started doing? All right, number one, week 1 did nothing. Week 2 went higher. Week 3 is starting to go lower. So you can anticipate week 4 to either close off this candle or to continue a sell-off lower. That's number 1. Number 2 is on a higher time frame. Okay, let me, in 1 second, my laptop's getting low. Let me charge this real quick. All right. You can see on this way up, right, we are continuously rejecting lows and breaking through these highs. All right, rejecting lows, breaking through highs. What have we started doing in the past couple weeks? Okay, we're starting to displace through lows and reject highs, right, which we have not done previously, right? This is indicating to me some bearish shift, a bearish sentiment, possibly, at least to this low. Okay, and then if we, again, if market profile continues to reject highs and break lows, and this low gets displaced through, that will further the probability of a more sustained expansion lower. Okay, but if you just look at it through highs and lows, on the left side, lows were being rejected, highs were being broken, and on the right side, we're seeing the quite the opposite. Okay, we're opening up, we're rejecting highs, and we're displacing through these lows. Okay, so it could be the start of a sentiment shift in gold. Does that make sense? Luck? These is, especially when we do hit that lower liquidity pool, definitely have to watch, see what happens. Yep. Yeah. It's just, now, again, I'll preface by saying this. If we take this and we reject, by all means, buy, right? But looking at the general structure right now, and I very well could be wrong, I'm fine with that. It looks to me that we have started to displace below these lows, and we started rejecting these highs. Okay, so unless this is going to be a large range, and then this will be a soup for the next year, I'm just trading the market profile. Simple as that, right? If we're going to reject highs and break lows, I'm going to sell into bearish key levels and offset it into sell stops, right? That's the idea. And then if this rejects, then we have a new sentiment, a new idea for the following weeks. All right. Any other questions? I think I covered just about everything. Again, I'm not trading at all this week, so I'm not going to do much outlooks because I honestly haven't looked, nor do I want to speculate on anything. I like this perspective a lot because it doesn't make me feel like I need to know the goals 100% at the time. Yep, exactly. You don't need to know if we're going to go back to all-time highs. You just need to know that there's a likelihood of this low being taken, and you can trade the key level to the low, right? That's a high probability setup. I think I'm good for now, and yeah, I'm going to take some time off as well, just backtest reverse engineer until next year. Yep, yeah. This week, I'll be taking probably the rest of the week off, and next weekend we can run a backtesting session. I'll let you guys know time and date details more. But that'll also be recorded as well. So yeah, I'm gonna wrap up the recording here, and yeah, we can do